Hi, and welcome back to CMG Aura Space Trading Channel. We present to you how to develop a simple trading strategy. Now, this is one of the most disregarded or underrated strategy or idea that every trader should have, right? Yet, it is the most important of all the skills that you can acquire in trading. Now, trading without a trading strategy is like a driver or a pilot without what? A map, right? Or a compass. It's like a businessman doing business without a business model. So doing this, it means that you are going to what? Run into a loss. And even, in fact, at the end of it all, you will even be discouraged, and then you find yourself dancing. And for that matter, you are going to stop whatever you are going to do. So for every trader, you have to have this. In fact, this is a must, right? I have to be honest with you. It's a must. So you have to get this. Now, I actually wanted to go straight into what doing a video on back testing and forward testing. But on CMG, we always try to take things from the rudiment, right? The basics, the elementary. Because without the elementary, no one can become a professional. That is the truth. So a lot of traders are trading. They call themselves the trading guru, the market god. In fact, this is not disregard to anybody who bears this name, but they call themselves with great names. In fact, fancy names. Yet most of them, or most of us, do not have this as a tool. So without this, count yourself out of the market. In fact, you won't make it in this discipline or profession. So CMG is here to guide you in developing a simple one for yourself, right? So I'm going to give you a step-by-step guide to this. Now, first of all, developing a simple trading strategy involves a systematic process that involves ideation, right? Someone will say ideation, but the right word is ideation, right? Testing and refinement, right? So you have the idea, you create it yourself, right? And then you test it. After testing, you have to what? Go through monitoring and then refining. These are the basic 3 steps in what? Developing a trading strategy. Now, let's look at the first thing. Step 1, define your goals and objectives, right? Every businessman will have a mission, objectives, and then goals. Without that, you are not doing business. You won't be in business for long because it means that you don't have any direction, no business model. So you have to have an aim, a goal that you have to what? Fight towards. So it's the same here in what? Trading. In fact, trading, many a time people think it's like anything that you do haphazardly without any guide. In fact, it's a structured thing that you have to do. So when you check on this channel, right, we have beginners, well structured, beginners, intermediate, and advanced. This video actually is going to be in the advanced playlist. So watch this, and then you'll be good to go, right? So 1, determine your markets. So determine the market, what does it mean? You decide on which financial markets you want to trade. We have in fact, the financial market is a big one, right? We have the stock, the forex, the cryptocurrencies, and other assets, options, and then futures. You have to decide which one are you going to do that. So this thing should actually be what? A written out document for yourself. Write it down, right? You decide. So when it comes to CMG, ours is what? Forex. And then sometimes the crypto, right? So that is it. That is our what? Our market. Then you set your goals. Determine what you aim to achieve with your trading strategy. Why do you have that for market chosen? Why do you have that market listed, right? So that is the example, consistent monthly return, right? Returns, long-term growth, right? You have a trading strategy for you to have what? a consistent what growth in return, a long term or a short term. It depends on you. You have to decide and indicate that on your what on your in your document, right? And then three, look at the risk tolerance. Understand your risk tolerance to ensure the strategy aligns with your financial situation and psychological comfort. So, in fact, as an investor or as a trader, you should understand yourself. This is subjective, right? You have to know your risk tolerance. It's one of the important aspects when you look at the three branches under trading, right? We have the technical, we have the risk management, and then we have the psychological, right? So, in fact, this can fall under the psychological, and then in fact the risk management. You have to know yourself. Are you someone who, when their $1 is missing or two cities is missing, how do they react? How do they behave? Are you under? Do you keep your composure? Yes, you have to know your limit. So, in fact, in the traditional way, if you're going to invest in any of these investment, you have to know your risk tolerance. It's important to do that. So that is it. Now, well, let's look at the step two. Now, step two is what developing a trading idea. That is actually what the strategy that we are going to what develop, right? So you do your research. Now, study various trading strategies and market conditions. Now, understand the fundamentals and technical aspects of the chosen market. So we are talking about trading strategies and the market conditions. We have a number of trading strategies, right? We have breakout. In fact, we have a lot of them. The consolidating one, the trendy one. In fact, there are a number of them. So which one are you going to trade? Are you going to do a breakout, trade within consolidations? You have to what? Know that. There are a lot of them. So in order to get more insight, just look them up, right? On the net, Google, that will be okay, right? So that is it. And then what you do, you know your what? Your market conditions. It revolves around the same idea, right? Just look them up. Understand the fundamentals and then the technical aspect of the chosen market. You have to know that. Now, two, identify what patterns. Now, look for patterns, trends, and signals that can form the basis of your strategy. Common patterns include moving averages, breakouts, and then trend reversals. You understand? So the same idea, but you have to be specific in writing them out in your what? Your documents. So are you going to trade what? Trends, right? Check signals that form the basis of your strategy. You have to develop that and then write it down. Now, common patterns include moving averages, breakouts, and all that, right? Now, three, formulate rules. These rules should come from you. So that is why many a time you hear that no two traders will have the same trading ideas or better still, trading strategy. We have trading strategy and we have trading style, right? One is a subset of the other, but in fact, they go hand in hand, right? We have trading strategy and we have a trading style. Your trading style is quite different from everyone. You may have a similar trading strategy. Let's say you are trading at a breakout. I'm also trading a breakout, but our style may be different. When I exit, when I enter, when I have to wait, you understand? Are you aggressive type? Are you the conservative type? Right? So on this channel, our type mostly is what conservative one. So when you see that confluence, we hit, zoom in, we hop on. So that is it. So define clear entry and exit rules for your trades. You understand? So the entry rule, you have to know that when do you enter the market and then when do you exit the market. So it's as simple as that. You have to know this. Write them down. Once again, write this thing down. Don't assume them to be in your head, because when everything is on paper, then you have the ability to go and edit this. Bear in mind, trading strategy are prone to what? Periodic what? Amendment or monitoring, or yes, that is it. So you have to have them down. With time, you have to be doing that until they are okay for you. In fact, no trading strategy can play out for more than 3 years or 2 years. So you have to be amending. It's part of the thing. But first of all, you have to have it, the what? The rudimental one, in fact, the typical one, then you do what? Your changes. Now, let's move to the third one. The third idea, right? The third step actually is what? Back test your strategy. Now, the fourth one is also what? Forward testing. Now, I told you I was going to do video on back testing and forward testing. These two are somehow different, yet one, once again, is a subset of the other. It means that, in fact, forward testing is a subset of back testing. You can't have a forward testing without back testing a strategy. That is it. Let me say this before I go into the explanation. The explanation, I'm going to be brief here because I have a video solely on back testing and forward testing, right? So just watch that video in the description, right? I will be more specific and concise and then brief about it. That is it. So now let's have a glimpse of it. Now, under back testing, the first thing is what? Collect data. Now, collect data is what? Gather historical data relevant to your market and trading idea, right? So that is it. So basically, when we talk about back testing, is your ability to what? Check or yes, or verify that if whatever strategy that you have, so let's assume we have our strategy, right? We have developed at the top, the first and second step, we have the strategy. Now we have to what? Test this strategy with historical data. So if you take a particular asset, let's say gold, right? Then you go back, let's say 1 year or 2 years back. Then you test your strategy with this particular strategy. So you test them to, let's say, the current market condition, right? Or time, right? So me, for instance, me, my back testing, and that I use basically trading view. So trading view gave me up to 1970 data, right? 1970 back testing, 1970 data. So I started from there because I'm using the free version. If you have money, you can buy the premium, and then you can have a bigger data, right? And then you do the performance. But you are new, probably you don't have enough money, so don't worry yourself. You can backtest up to 1970 or so. So that is it. So you do it, and then you come forward. So that is backtesting with the strategy, right? You assume that with this strategy, if you were trading this with your entry, exit rules, and would you be profitable? Would you have been profitable or not? So that is all about what? Backtesting a strategy. So right, so that is it. Now, two, simulate trades. So you are going to what? Try and then be entering trade in the back, not at the front. At the front, using the historical data, right? So you do your markings, you do your analysis, you enter, then you push the what? The market forward, just to see, supposing you had entered this trade, would you have been profitable or not? So you do that. We have some market simulations that you can do. Some you have to buy, some you can, in fact, you can do it naturally or traditionally. You just use trading view, right? Be honest with yourself, and then do the testing. You enter at one point, you shift the view, the trading view, the screen to your right. Then you enter at the back, and then later you push it forward and see the results. That is all about it. That is it. Right. Now, let's look at the third thing. Analyze performance. I think we have, okay, now it's a subset of the second one, but I think there's a clear distinction here. Yeah. Now, analyze performance. What does it mean? Evaluate the strategy's performance using metrics like return on investment, right? Every investment or every trade or every position that you enter, we have the lot sizes, the L's, the SL, and the TP. You check that. We have the risk to reward ratio. That is what you have to look at. We have Sharpe ratio, right? Sharpe ratio. That's hold on. Yeah, so the Sharpe ratio, in fact, helps investors understand how much additional return they are receiving for the extra volatility of holding a riskier assets. You understand? Let me say it again. It helps the investor, so a trader or investor like yourself, a retail trader, right? To understand how much additional return they are receiving, you are receiving for the extra volatility. You understand? Look up for what is volatility. Volatility of what? Holding a riskier asset or holding, in fact, an asset, right? So it helps, in fact, it helps indicate a more attractive risk adjusted return. That is it. You can look it up for you to have a better understanding. For the purpose of this video, the length, I have to be what? Very precise here. Now, the third thing is what? Maximum drawdown. So maximum drawdown, that is very typical or real in what is called ProFirm, right? So ProFirm, they will give you, ProFirm are special institutions. They give you a capital, you trade with some conditions. So the conditions, one of the conditions is what? Maximum drawdown. If you want to know more about this, just in this video description, you will see what are ProFirm, the link, click that, it's a short video, learn that, and then have a better understanding. Right, then we will talk about what win or loss ratio is the same as what risk to reward ratio, the SL and TP. We check that. So with these percentages and with these figures, right, variables, you have to be what? Concise, precise, consistent with this figures, right? Today you don't set a SL of 50 pips, then tomorrow you don't set SL of what 100 pips. You have to be consistent. That's what it means. Then let's look at the fourth one. The fourth one is what? Adjust rules. I told you from the onset. Now refine your entry and exit rules based on the backtesting results. So once again, backtesting, you have to watch the video on that. What is backtesting and how it is actually done. Now, ensure you are not overfitting to the historical data. I know. So backtesting actually is when you use historical data to do this. So many a time you'll be tempted to be adjusting, right? Let's say you entered at one point and then you set your SL. Then you move the screen forward to see what would have been the result. Then you realize that just only a pip made you what? Lose a trade. Then from there, you try to adjust because you have the ability to do that. Now you have to be honest with yourself. If you're not honest with yourself in life, in this life, or in fact, in this discipline, you are not going to make it. Because when you actually start doing this, trading this real accounts, you have no option. You have no power to be monitoring what, in fact, be adjusting what an already entered or considered SL. You can't alter it. No massaging here. So that is why it's always advisable to be honest with yourself, even in the backtesting phase. That is it. Then after you have considered an SL or lose, then if this continues for a number of times, then you have to realize that maybe there's some adjustment you need to do in the what? In the strategy, but not in the entry, the position that you entered, right? So that's what we do. You do that until you are okay. Then you can go forward to what? Forward testing. So that will lead us to what is forward testing. Now, forward testing is what? Paper trading, right? Paper trading is another term for demo. We all know demo trading. That's where you trade without real accounts, real money, real capital. Every broker, in fact, almost all the brokers will give you this opportunity. Some have a limited time, some do not have any time for you to trade. So you find yourself as huge amount as you can, 100 trillion. You can actually put this into your account and trade. But mind you, you have to be practical because every amount that you put in your account is something that should be feasible. Suppose, or let's assume you are ready to do what? Fund your account and start trading. So you should start with the account that you think you will have in the real sense. Then you do that. That's an advice to you. You have to take this. So you can start with $100. Let's say 10,000. Don't go beyond $100,000 account. Don't go beyond it. You can even start with 1,000. Because whatever strategy that you develop, right? If it is correct, no matter account size that you trade, you will be profitable on it. Right? So when you move into a higher trading account size, then it's just a matter of what? Increasing your contract size or better still, the lot size. Then that is it. You are good to go. So that is, so let's look at paper trading. I think we have checked that. Number two, monitor performance. Continuously monitor the strategy's performance and note any discrepancies, right, between back testing and forward testing. Many a time, this thing will arise, right? Some discrepancies between them. When you were back testing, things were smooth. When you start forward testing, you see that things are quite different. So you have to come to a compromise and adjust. This is barely or solely dependent on you. If you cannot do this, you have to seek a guide from your mentor. I'm also here on this channel. We render what free services and at the same time VIP services. So you decide. That is it. If you want to move faster with proper guide or guidance, then you should seek a mentor. Else, on this page, in fact, you can do anything. You can learn everything on your own because things are very structured. Just that is the rate at which you may understand or move will be quite what toward it. So that is it. But besides that, you'll be good to go. Now, three, adjustments. Make necessary adjustments based on real-time performance, right? This could involve tweaking your entry exit rules or adjusting your risk management parameters. So that is it. With time, you realize that many a time you are not consistent with your risk to reward ratio, and then you it was too small or too big. In fact, this is once again subjective. You have to decide on that. Now, let's move to the fifth one is what? Implement risk management. What? That is it. So every strategy that you do, you have a risk management aspect of it. So we have something called position sizing. Now, determine the size of each trade relative to your total capital to manage risk. That is it. The position sizing talks about the risk to reward ratio. You understand the TPs, the SLs, your lot size, and all that. So basically about that. Watch the beginner's video and you would understand this. I think the intermediate too. So do the beginner's intermediate. If you are fresh, very green, do that. Now, two, stop loss orders. You set these things. Risk to reward ratio, you set that, right? So just read. Ensure your strategy maintains a favorable risk to reward ratio. Don't risk more than you can afford, right? People do that when they have the gambling spirit, impatient, and they want to get back at the market when they lose. It's a very bad thing for every trader to do that. Now, step 6, monitor and execute. Now, live trading. We are moving to the live trading. Now, once you are confident, right? You have done your back testing and then for testing, and then you are okay. What do? You go into live what? You go live. Live means you have real assets, real money. And then when you are confident, then what do? You start trading with real capital. 2, continuous monitoring. Like I said earlier, you are not going to keep a fixed trading strategy forever. You always continue to monitor, alter, and then tweak. Now, there's one thing that people also do. They are very quick to what? Massage or edit or change their trading strategy when they lose or when there is a losing streak of, let's say, 5 days or 5 times. Don't do that. Sometimes the market anything can happen in the market. You just have to be confident. I think this will be more helpful if you have a mentor, right, on this. It really helps. So that is it. And then you keep record. Now, keeping record, we have something called journaling, trading journal. I have a video on this. What is it? And then how it is done with ease. Easy step. I've done that. You see the description in this video. You see the link in this description, this video description. So that is it. Now, including the rationale, outcome, and any lessons learned. As we trade every day, there are some mistakes that we make. And then anytime you make a mistake, write it down and correct it. Don't overlook it. Don't take it for granted. This is one of the reasons why many are losing in the market, not because they don't have the skills of doing technical analysis, but the fact that they overlook things and then try to what? Be smart, outsmart the market. You can't outsmart the market. Now, point 7. Now, review and optimize. Regular review, periodically review your strategy's performance, right? Analyze what is working and what is not. It's important. Optimization, make data-driven adjustment to optimize the strategy. Avoid over-optimization to historical data. People do that, which can lead to poor real-time performance. Stay informed. Keep up with the market news, right? Trends and new strategies. Continuously educate yourself to adapt to changing market conditions. You have to learn, right? Every year, I must say, every year of some period of time, we have something called market algorithm. Things change. So when they change, it means it's going to affect your trading strategy. And then for that matter, you have to also what? Do some tweaking. But the tweaking, I have to be more, I don't know, I'm very keen on this. People over tweak, over optimize. That's what we are saying here. Don't do that. Because no trading strategy is 100% accurate. That's one thing you should bear in mind. No trading strategy is 100% accurate. So don't over optimize, over massage, over tweak your trading strategies. Yet you need it from time to time. Now, examples of a simple trading strategy. One may ask, what is even a trading strategy? Right? So there are a lot of them. You can even look it up on the net. There are a lot of them. You can go to them, read what they are, right? Trading strategy example. Read what they are. But your style is different. Your style is unique to you. But the trading strategy can be, in fact, we have a lot of them. So you have to take each of them, right? Read theoretically to understand what it is, and then start what? Testing, right? You draw your what? Your own trading strategy around it, your rules and exit conditions, right? Rules, you have to write around it. So that's what it means. So in that, what is it saying? We have moving average crossover, right? It's a simple trading strategy that people use. So that is to capitalize the trends in the stock market. Stock market, in fact, let's put it the financial market. Then we have the entry rule. We told you buy when the 50-day moving average crosses above the 200-day moving average. It's golden cross. A lot of people do this, use it. In fact, when you are a beginner, most of us, in fact, went through this. Then from time to time, we developed our own strategy around it, adding more confluence to this. So it's important. It's a stepping stone. We have 4, risk management. Use a stop loss order at 2% below the entry price. This is relative. If you choose yours, don't choose. And one thing is, don't choose percentage per entry more than 3%. I've been trading for a long time, but for me, even for me, on a trade, I don't risk more than 1%. I'm saying this again. On a trade, I don't risk more than 1% per trade. So what it means is that if you have a capital of 10,000 actually 1,000 capital, right? And then you are entering a trade, a position, you should not lose more than 1% of 1,000 is how much? Is it $10? Yes. So don't lose more than 10. Do the math. Don't per trade, don't lose more than $10 or 10%. Sorry, what did I say? 1% actually on that. So that's what it means, right? And then you'll be good to go. So in conclusion, developing a trading strategy involves defining your goals, important thing, researching and formulating a trading idea, but testing, implementing risk management, executing trades, and continuously monitoring and optimizing the strategy. By following these steps, you can develop a robust and adaptable trading strategy tailored to your financial goals and risk tolerance. So that will be the end of this video. Thank you very much for watching. Please like, subscribe, and share. If you have any questions, just join our Telegram page. The link is in the description, and I will attend to you for free, unless you want the VIP treatment. I'm here. We have other opportunities too. airdrop, crypto mining. We have a lot of them, some interesting ones, which are even going to be listed hopefully very soon. So check in this video description and then enjoy. We will say bye for now. Stay blessed.